Welcome back everyone. Hope everyone is having a great day. I figured I would do this video to talk a little bit about my newest gold purchase, what it is, why I did it, why I like it, and will I be buying more? Now before I begin, I do just want to point out that obviously I own the stock. Not all of it, but enough to mean that it's probably a bad idea. Now, if this makes you not want to buy it, good. This is not the point of my video. I just want to talk about it, not make people buy it. Because while I think it's right for me, that doesn't mean it's right for anyone else. So it's important to do your own research on everything and not just invest. So what happened? Well, this was a bit of a scenario of out with the old, in with the new. Now, there was a there were a few positions that I had that I don't talk about on this channel, and there was a few gold positions that had some more success than I had anticipated, and so I moved out from some of them from that I had from before I started this channel even, and I really am still bullish on gold, so I had this new position that I was watching for a while, and I kind of decided that it was time. It was cheap, and I really wanted to own some of it. So, in getting to why I like this company, I think this story is relevant because I'm so old. I remember when everyone hated gold mining, and I'm talking like 2017, 2018, because quarter after quarter, stock after stock, it was just disappointment galore. Every quarter, every earnings season, you're just holding your breath. You just wanted to just kind of crawl up into a little ball because every every company, not everyone, but most companies, they would miss on expectations, the costs would overrun, and it nothing was going right, and it was just you were just concerned about basically all the stocks. Now, at this time, I was looking for the good way to get exposure to the upside in gold, and that's when I found this company. And I thought it was very interesting at that time. Now, I did not buy it at that time because I thought it was valued at a premium to the gold miners and other gold companies. And I thought honestly that it probably deserved that premium. But I'm just too cheap to buy something valued at a premium, especially when you had all of the gold miners that were just like really disliked. Now, I did come close to buying this in August of 18, but again, you just look around, you see everything that's trading super cheaply. I think it was August of 18. Anyway, everything was super cheap, and this wasn't, and so I couldn't, in my head, pull the trigger on it. Now, as I like to do, I have started scaling into this position. So if it goes down, if the share price goes down for no good reason, then I will be buying more. That being said, it is started as a decent sized position because I do like it, and compared to what's around, I see it as much cheaper. And so I'm prepared to make this one of my sizable positions. Right now, it's decent size, but again, have one portion, and I'm ready to buy maybe three more big chunks if it if the price warrants it. So why not to buy this? And I like to start with a bit of a bear case because obviously I own some, but that doesn't make it a good idea at all. Because this is a company that's not super diversified. They have a few assets, yes, but it is in one centralized jurisdiction, and so geopolitical risk can be devastating to them. Now, also, they have been lagging the sector recently, which, maybe the people have changed their mind on this company, and right now, there's no good reason for them to turn around like today. They could continue underperforming. So it's not because suddenly one person thinks they're cheap, so they're going to turn around. Not at all. Also, their shares are not super liquid in that, um, there's companies, let's say you wanted to buy Newmont, for example. You could, at any second of any day, buy shares or sell shares within like a 1 penny spread. This company, Yeah, there's bids and there's asks, but there's not millions of shares that trade at any point. So getting in and out, you might not be able to for one penny spread or at all points, depending on how many shares you're trading. So they probably deserve an illiquidity discount, which I view as them getting, which is part of why, well, I mean, I plan on holding for a while, so I don't really care too much about liquidity. Now, uh, they are a pretty small company, so this illiquidity discount could also be paired with the fact that, there might never be relevant for big money to care about. So that possibly deserves even more of a discount if you care about someone buying the shares later. Okay, I hear you. I hear you. What is the company already? The company is Dynacor Gold Mines. And although they have gold mines in the name, they are not a gold mining company. In fact, they are a gold milling company. Basically, in Peru, there's plenty of small artisanal gold mining, permitted gold miners. So, like, uh, a small few people will mine small deposits of gold and they will then have the ore. What they do with this ore is they then truck it to Dynacor, who mills it for them and who will buy the ore and then mill it and make a margin on that. So, Dynacor, bit of a profile can be seen here. Market cap's approximately 66 million. This is Canadian here. They have less than 39 million shares. They're actually buying back shares as much as they can to a degree because there's some restrictions with how the TSX works with how many shares they can buy back based on liquidity. But anyway, that's not super relevant right now. Share price is around 170 Canadian as of the time of recording this, maybe 169, maybe 168, whatever. They pay a 6 cent per share dividend per year, so that's 1.5 cents quarterly, again, Canadian. The ticker can be seen there, DNG or DNGDF. They have $10 million on their balance sheet, so uh, they can weather a bit of a storm, although they've been profitable for the past, I don't know, 8 years or so. So hopefully that remains the case. So why do I like them? Well, in a way, they remind me of Global Atomic, which is one of my larger holdings, in that they have a profitable business that I view as cheap on its own merits. So whereas Global Atomic has the zinc recycling, these guys have the milling. And if you look at the price to earnings, and I'm not talking about EBITDA, I'm talking about earnings, they look like a cheap company. And you know what? Guess what? They're kind of growing and they have potentially the ability to expand their business elsewhere. Now, they are also, and I'll use this kind of facetiously, wasting some of their excess profits, and by excess I mean beyond what they're paying back to shareholders, trying to hit a home run, if you will, with exploration with another asset. Now, personally, I view this as kind of bonus potential because if they strike out, really, I still view this as an inexpensive stock. So it's not that I wouldn't care. I mean, obviously, it would be nice if they were successful, but they can do something else with the money if the asset turns out to be much less than they expected. So I just want to reiterate this. In addition to being profitable now, and by the way, profitable with significantly lower gold prices, they are growing, they pay dividends, and they buy back shares to reduce their float, meaning as time goes on, especially if the company remains cheaper, you would be owning a greater and greater percentage of this growing company. So why do I like those pluses? Well, if they weren't self-evident, I just want to point out what I look for or what I like to look for in propositions for investments. I like investments where things getting worse makes things get better at an increasing rate. Kind of like in uranium, where the more time that the price spends lower, the higher it eventually will go. Now, the same concept kind of works here with share price in that the lower it goes, the more they can theoretically buy back with less money, meaning you get a bigger and bigger portion of the company. So if the share price goes lower, A, I can buy more, B, they can buy more, and I get more at a higher dividend yield with the buying more, and put A and B together, and you get the compounding effects of that, meaning in addition to this divergence between what I view as value and what I view as what is the price, you get more at an expanding rate. Now, if that happens, plus they continue their operations or expand operations or buy a second operation, whatever, if they can continue their growth independent of well whatever the price is, well then this effect compounds even further. So really, it's a situation where I view it as getting better over time, even if the share price does not. Now, I'm not going to say that this is a super exciting business. It's not. They're not buying or creating electric flying cars or whatever. They're milling gold for permitted artisanal gold mines in Peru. So it's not exciting by any means, but they are a business and they do make a profit margin that's a percentage of the gold price, meaning if the gold price goes down, their earnings would go down. If the gold price goes up, their earnings would theoretically go up. And I say theoretically on the upside, I should add theoretically on the downside also, because if you take a stable percentage of the gold price, you can work out the math and see what I'm saying. So while there is a theoretical catalyst in drilling that could theoretically change the price of the company, that's not what I'm mainly looking for in this investment. They pay a dividend. Now, while that's not the reason to buy the stock, it is a decent dividend. Looking around the gold space, you can find a lot of things that might pay 2%, 1%, something like that. They pay what amounts to, I believe it's 3.8%. So it's a decent dividend, but again, not the reason to buy the company. They're also buying back shares, and so patience will have its own reward there. Plus, they are profitable and debt free. They have net cash of 10 million, which is approximately a sixth of their share price. This is a real company. Now, while the business of milling might sound like something that will put you to sleep, they are they should be growing. They planned on expanding operations, their current operations in 2020 and then more in 2021. They are also considering adding milling locations and growing their business in potentially other markets. If they can do that, then there should be even more growth on top of what I'm looking for. And that could be a significant mover of the share price as the company gains scale. If they don't, well, they're still cheap today. I'm always trying to be skeptical about big growth plans. But the point is, they should be able to do that out of profits and cash on their balance sheet. Now, again, in the past, I would have argued that they deserve a higher uh, valuation multiple because historically they've gotten one, and I would have thought that's deserved. Now, however, people seem to be more so into miners, and that's fine. I have stocks in miners, but I could see them easily deserving of a higher multiple, while I also see them as growing the E part of the P and E. So again, the effects here could, in theory, in the future, start compounding. Okay, now their home run potential. So I like to already think of this as a strikeout. Why is that? Well, because it's not always the easiest to push through permitting in regions of the world. In the region of the world where um, their project is, there are a number of majors and decent big gold mines. So I'm not saying that the asset is bad by any means. I don't know. We don't know. There's hope for it, but we'll see. I'm prepared for them to completely strike out on this one. But I realize that there is some possibility, but my point is just that I wouldn't put major hope in it because they did have to, not with regards to this asset, but with regards to another permitting question in the country. There was a news release and they said they had to deliver a 7,800 page document in order to get the permitting done. So there's a whole lot of red tape, green tape, yellow tape, pink tape, whatever you want to call it. Um, so the point is mainly that while it is a potentially big asset, I don't have super big hopes for it, but the fact is they'll be able to explore it at least initially and through the initial phases out of cash flow and cash on hand. So you're really not paying much, if anything, for this project. But it is a part of, I guess you could call it the package. Now, this is not some magic company. I want to reiterate this. This is not some you have to know someone who knows someone who knows someone to know it. I know no one. And even though I think this stock is cheap, that's because it has performed relatively poorly uh, relative to gold's recent moves, and it can still fall a lot. And it is possible that some issues arise. That's not impossible, and it's important to notice. Now, it's also important to realize that maybe this stock, the market cap 60 million Canadian or so. It's possible it will never be big enough for anyone to care. By anyone to care, I mean people to think it deserves some takeout valuation or whatever. I don't necessarily think it deserves a takeout valuation. I just think that it's cheap based on its cash flow and the gold price, and I don't really care about someone buying stock from me. I'm happy to hold for as long as I can see. So one thing I do like about this company, well, not just this company, but companies of this size or like this, is that you really need to run your own numbers because you look at half of the sources of public information and really they don't care. They don't care if the company's talking US dollars or Canadian dollars. They don't look at forward earnings. They don't really run the numbers too much. So really with this type of thing, you have to look at the company itself, run the numbers, see what you think the numbers will be in the future and use whatever assumptions you want because really the broader market doesn't really view these companies as relevant, so it doesn't really there's no one questioning what the numbers are going to be or really. So that's the type of thing that I like to find. Now, if we're looking into numbers and as far as what this company might be worth if everything goes well, I think that's A, missing the point, and B, well, nothing ever all goes well. But there's still, I think, even without assuming that everything goes well, I think you could look at the numbers and think, okay, well, what might this be worth? What if they can do one or two things right? And you could kind of figure in your own valuations. I'm not going to talk here about what I think it's worth. Is it a 10 bagger? Well, probably not, but it's not outside the realm of possibilities if they have some good drill results or if they can add a second and a third mill and double or triple the cash flow there. Price of gold goes up a bit. So it's really, the point is, it's not seeking for massive upside here, although that's not completely impossible. The point here is it's relative to today's price and today's outlook, it looks interesting. So just to drill down a bit more on the risk reward profile here, I realize that this is a small niche type company and probably will never be big money relevant. I also think it's very important to realize that for me, this is not all about offense looking for the thing with the most massive upside. If you want something to drill into the ground and come out with a rod of gold, well, then you just want to find the cheapest company out there with like a $500,000 market cap and a prayer. But that's not what this is about. This is about finding a company that's cheap on its own merits, but still has decent upside potential. Maybe not 10 bagger. Really, sticking a number on something is just, arbitrary at best. Because if something has a good risk reward that fits with your personal profile, it doesn't really matter what number upside is, except for you. So this is, again, this is about value defense, not upside offense. So I think that this company is currently worth a good deal more than it is trading for before going into the, well, what if they can, whatever. So to summarize what I like about this investment, A, and this is primary in this case, they make money and they actually make money in earnings and not just EBITDA before having a load of debt and kind of move paper and numbers around to make it look like they make money. They make money. And you know how I know they make money? Well, because they give it back to shareholders. Well, in addition to a number of other reasons, but the point is they make money, they pay dividends, they pay dividends of a decent amount. It's not a token we pay $10,000 a year or whatever in dividends, so we technically pay a dividend. No, they pay 3.8% of their current share price. And they do this while decreasing the share count, meaning as long as you hold, you own more and more of the company, so you're entitled to more and more of the earnings in the future. I like their strategy, and I agree with many of the decisions that the management has made. In this case, there's often, management out there where you like them or you agree with most, but in this case, I really agree with a whole lot of what they've been doing, almost everything. In fact, I can't really think of anything that I don't agree with. But anyway, I like the price, and I like the price now, which means I'll like the price more lower as long as it's just the price moving down. And I like that their earnings should be tracking the direction of gold because I think there's still more upside in the price of gold. So that's all for today. Thank everyone for watching, and I really hope you enjoyed. Remember, never buy anything because I talk about it or because I buy it. I just thought this might be worth a look, and so I shared it. And again, have a great day.